Welcome to Trade Ideas. I'm Jake Merle, sitting down with Doug Bush of ChartSmarter.com. Doug, great to have you back on the show.
Fun as always. Thank you, Jake.
So you're usually a pretty bullish guy, but are you looking at anything right now that suggests, you should be cautious?
Particularly the software sector. It's the top performing subsector within technology. If we were to take a look at the IGV, it's the ETF best represented by software, it's showing some troubling signs. In the last 6 weeks, it's actually made 3 lower highs. And in that time frame, it's actually undercut its 50-day moving average twice quickly after recovering it, which is a poor technical sign. If we were to look at the ratio chart, comparing software to technology, it's showing a bearish divergence. In March and April, as the IGV actually went up, the ratio chart comparing it to technology went down, suggesting that software wasn't really pulling its weight, and that's not what you want to see in a top-performing subsector. There's actually a phrase in tennis that says it's much harder to stay at number one than it was to get there, so maybe that's what's happening to software now, that everyone's gunning for it. As technicians as well, we like to monitor the price action of leading stocks. Their health or lack of speaks volumes. One example is Xilinx, once a beacon of light, if you will, in the semiconductor space, is now 24% off its most recent 52-week highs in bear market mode. More importantly, 2 best-of-breed software names, Trade Desk and Coupa Software, on Monday recorded bearish gravestone doji candles at all-time highs. And keep in mind, that was the session where CRM actually bought Tableau, DATA, so you would have thought that you would have seen a little more lift in the sector. And, most of the names reversed that day, and it's kind of been the same since.
So how exactly do you recommend playing the current setup?
Well, the ETF, I'm more of a single idea generated type of guy, so I have some stocks, not necessarily software. But I think, with the way the IGV is acting, it's probably best if you were to play it, just to play it on the small side or from the short side until you see some resumption of the uptrend.
So which specific stocks are you actually looking at?
Well, I have a pair trade today within technology. First, on the long side, I have Advanced Micro Devices, symbol AMD. It's not for the faint of heart. It's higher by 74% year to date already and up better than double over the last 1-year period. The stock is prone to massive moves, highlighted by a 250% gain during a 19 of 23-week winning streak between last April and September, which was immediately followed by a 6-week losing streak that lost 50%. Last week, volume trends are fantastic in AMD. Hasn't been 1 week of distribution in all of 2019 thus far. Last week, it rose 18.2%, its best weekly gain in the last 9 months. It took out a weekly cup with handle trigger of 30.05. I think you can enter that on a pullback at 31 and use a stop of 28.
And what would you say is the biggest risk? Because it has run up quite a bit so far.
It has run up pretty, but I think right now, look, we're looking at both of the ideas I'm going to present today are weekly charts. They're more longer-term charts. This breakout was significant. I think you have a good risk-reward right here. If it takes out the 28 stop signal, you're out.
And over what time horizon do you expect this to play out?
It could take out to the end of the year. Look, as technicians, we're more focused. It's hard enough to get price right, getting the time right as well. As long as the price action's acting well, stay with the name.
So Doug, what's your target price for AMD?
It's hard to say. This past week, it actually hit a double top near the 34 range, and it's actually pulled back 6-7%. Toward the end of the year, if it could take out that 34, I could see it in the high 40s, into the 50s, into the end of the year.
And you mentioned this was part of a pairs trade, so what's the other side of the trade?
Okay, on the pair trade, on the short side, I'd like to represent LogMeIn. It's a computer services laggard, symbol LOGM. It's down 13% year to date, while the XLK, the overall technology ETF, is actually up 24% year to date, so very weak relative strength there. It's down 38% from its most recent 52-week highs. Unacceptable in this overall pretty firm tech tape. The stock is lower 11 of the last 19 weeks. And most importantly, last summer it had a nearly 30% haircut the week ending 7/27/18, and it's made no attempt to recover any of that loss. In fact, it's now below the intra-week lows of that week. Earning reactions have not been very well received. It's lower 4 of the last 5 times. 2 of those were by double digits. Volume trends on LogMeIn are just the opposite of AMD. We haven't seen 1 week of accumulation yet in 2019. And it recently broke below a long one-year bearish weekly descending triangle pivot of 75. I'd like to short back into that move at 72.50 and use a buy stop of 77. I have the width of the bearish descending triangle is 35 handles, so you subtract that from the 75 pivot. That would give us a measured move to the round 40 number.
And over what time horizon do you expect that to play out?
The same thing. It's just more about price action to me. It could take a long time. It's on the short side. Keep in mind you're going to make your money a little quicker than you're on the long side. Obviously, the market has a long time upward bias, but I think this name it's not participating at all in a pretty strong Nasdaq tape. You got to sell. You got to sell weakness here.
And what would be the biggest risk to that thesis?
Same thing. If that buy stop was taken out, if it was to actually trade above that bearish descending triangle trigger, that would be a red flag for the shorts, and you could actually probably go long with the name.
Well, Doug, can you please break down this pair trade in 30 seconds?
Sure. AMD, I want you to buy that pullback into that weekly cup with handle trigger of 30.05 at 31. Use a stop of 28. On the short side, log me in. I want you to short into that long bearish weekly descending triangle at 72.50 and use a buy stop of 77.
Well, Doug, that was great. We'll see how it plays out. Thanks so much for joining us.
Looking forward to the next time, Jake.
So Doug is bullish on Advanced Micro Devices, ticker symbol AMD. Specifically, he likes buying it on a weekly close above 30.05 with a weekly stop loss at 28. He sees it climbing into the 40s over the next 6 months. He also recommends shorting LogMeIn, ticker symbol LOGM, on a weekly close below 72.50. His stop loss is a weekly close above 77 with a target price of 40 over the next 6 months. That was Doug Bush of ChartSmarter.com, and for Real Vision, I'm Jake Merle.